Welcome to today's episode of Financial Myth and Misconceptions. Again, my name is Angeli Mondonedo and I am with Ayana Alikio. So every Wednesday, we'll explore a wide range of financial myths and misconceptions that can hold you back from achieving your financial goals. So from the more income you get, the richer you are, to saving is safe, investing is risky. Get ready to change the status quo, one myth at a time.
And then, as you are aware, we are financial professionals. We do offer complimentary personal financial strategy. And of course, we are here today to go through financial myth number 4, which is single people don't need life insurance or insurance in general.
Yes, single young people don't need
Oh, okay.
insurance.
Single young
Single young
people. I don't know what young means. I feel that I'm still young. Okay, but others would argue that I'm not.
Young at heart, probably. But the difference would be probably with the current mindset actually of either people younger than what they call as millennials or Gen Z, Gen Y, right? I've noticed that they mostly have the YOLO mindset, or let's say, what do you call what? How?
Yeah, you should define that for all the old people here, okay?
You only live once. I forgot that for a minute. So you only live once mindset, and so what they're thinking is life is short. They live life to the fullest, or it doesn't really encourage long-term mindset, right? So they don't really plan for the future. They just plan for whatever makes them happy, or uh, day by day, they just do whatever they want. Do you agree about that, or what have you observed with your the people that you talk to, like younger generations right
Well, there are definitely some, not all, that I see don't believe in protecting themselves when it comes to insurance or don't believe in it. And it's not just the young people, also like older people don't truly believe in insurance because of, I believe it's a taboo topic. It's not commonly talked about. And I think that's one of it. And that's just reality of that. But when it comes to single young, like Generation Z or maybe younger millennials that don't have much responsibilities, then I could see the reason why they don't really want to purchase insurance at this time. Okay? Because insurance is truly for the responsible. If they feel responsible for, let's say, if it's life insurance, if they feel responsible of the people that they'll leave behind, i.e., let's say parents, then they would purchase insurance in case something happens to them earlier than their parents. Okay, we're not immortals, so it could happen to us tomorrow. I could walk out of our condo today and get hit by a car or whatever, and then, well, c'est la vie. But I never know. Morbid, but you never know, truly. So unless you have a crystal ball to say that, hey, I only live at this point and I'm gonna get sick during this time, then now I could understand. Okay, but I find that insurance is a risk management, and it's truly for the person that's responsible.
Yes, I agree. I don't know why my camera.
I know. It's like I'm talking to a ghost all of a sudden.
But yeah, for sure. When like from my experience, or I don't know if it's the culture of Filipinos that really talk about money or insurance, but I was fortunate enough that my sister bring up insurance when I was 21 years old. And I still don't know like what is the benefits or the advantage of having it. I still got it. And I'm thankful. I'm almost done paying for that one.
Yeah.
I'm thankful because when I was looking at the cash value I have there, I didn't know that, oh, that's nice. It will be really helpful for so if my parents got sick, or if my younger sister got sick in the Philippines, and I have something to like a backup, or at
Mm,
least I have something prepared, even if I'm not married right now or don't have kids. You still have family. I still have family,
of
right?
course.
Um, so what do you think would be I know there are different types of insurances. I know
That's
you
correct.
know, but a lot of people don't know. What do you think would be, well, our topic is single and young, right? What do you think would be, what do you think they would need to look at or to talk to their financial advisor if probably they say they wanted to talk to someone tomorrow, right?
Fair enough. When it comes to, there's different types of insurance if we're talking about in terms of like personal financial planning. It's really truly about income protection. Okay, so there are living benefits, I like to call it, disability or critical illness insurance that protects your income if you become ill or disabled. And then there's also life insurance that you could purchase if you are single and young and healthy. I have to add plus healthy. Then you could qualify for lower rates, especially if you're family planning later or know that, let's say that you're going to purchase a home. Insurance is a good way to do that. Or getting into debts. Let's say that someone co-signed for you because you're single and young, you're just building your income, so you need a co-signer. Well, that person that helped you co-sign will be on the hook for the debt if something happens to you. So those are the things that I would look into for sure. And Angela, you also have to think about like insurance is also an investment.
And not a lot of people know that too.
And like think about it. So let's say that you're focusing on investing. We love to talk about investing. Like today's topic later on tonight is about asset accumulation strategies. We're diving into like investment 101. So that's all great. However, if you're focusing on that, and let's say you saved a few $100s or maybe a couple thousand, okay, how long will that last if you cannot work due to an illness or disability?
How long will I last?
How long will your money
Oh,
last?
money, probably. Well, consider health and money. You don't know.
Yeah.
You don't
Well,
know.
if your expenses is about $1,000 a month, let's say, I don't know, then you have $2,000 saved, then you'll be okay for a couple months. Okay. Other than that, well,
You'll cry.
c'est la
We go to the
vie.
bank.
Borrow money and get into a lot
Borrow
of debt.
money.
But if you have, let's say, disability protection or critical illness because of an illness, or you cannot work due to a mental health problems or whatever have you, then that is covered. Then you could take time to recover and receive a percentage of your income as long as you cannot do your occupation. So that's something to really think about. You get to reach your goals in a more secured way if you have insurance in place. You could even if you're single and young, you can get the basic insurance. It doesn't have to be fancy.
Yeah, I think for them it's just too much complicated. There are people, well, not really younger generation, but there are people who try to avoid things. Like, for example, their problem. Okay, I'm picturing again. Their problem or the future.
Yeah.
Right? So they don't talk about retirement. They don't talk about like what could happen.
Yeah.
If they wanted to have kids.
Yeah.
This is the best
But they
time.
have such big dreams.
I know. Let me get the Tesla car. But I'm not saving any money for that. That's weird.
Yeah.
So yeah, so
social media doesn't help too, just like everything else. Like social media give us like picture perfect type life, and they don't really talk about like anything that you want in life comes with like money. Like, what is the number? You want to retire early? Yeah, like there's a number. What's the number? Okay.
Yeah, everything is measurable, or everything is, you could set a goal and do it. So, but you mentioned that there's a number. How much do you think they need, and which insurance they should get?
How much do they need? Insurance coverage, if we're talking about life insurance, it depends on your income. They go through financial underwriting. If you have any debts, that should also be calculated into that. And then you get the total amount. Okay, so if you have, let's just say you're family planning, you're single and young, but you could have a kid on the way, or I don't know, or getting a mortgage or whatever. So you'd want to include all of that total coverage debt. We in our world, we use what we call a dime method. Okay, it just gives you an estimate. So you get your debts, your income, times that by 10, because statistically it takes about 10 years for the people that you leave behind to be financially stable. Your mortgage, it's cheaper to purchase a term life insurance instead of mortgage insurance. Maybe we'll have a topic on that. And then estate, or miscellaneous, I like to call it. If you don't have kids, then whatever the total is, you add that all up, should be the coverage amount that you should be covered for life insurance. When it comes to critical illness, I like to, for a lot of my clients, we do at least 2 to 3 years of their annual income of coverage. Okay. And then with disability, it depends on your monthly income. Okay? You cannot be covered outside of your monthly income source, because it's based on your occupation. Okay, so, but at the end of the day, it's all about suitability and affordability. Is it suitable for you? But most importantly, can you afford it? Okay.
Yeah. So, yeah, it's best to, well, each of us has different life, different situations, right? It's best to
Exactly.
specifically talk to someone, a financial professional, to go through all of those that Ayana mentioned about the dime method. It's not, it's different each person, right?
Exactly.
Different goals.
Exactly.
So yeah, so today's episode is single young people don't need insurance. I hope we have shifted your mindset to a new one that would probably help you, just not today, but you would definitely see it in your future, right? So your life is as good as your mindset. Mm-hmm. That's what I believe in. So unforeseen events, you can't control those. You don't know what's gonna happen in the future. And yeah, I hope we'll see you again next week. For all our guests here today, thank you so much for coming and listening. So don't get stuck with the financial myths and misconceptions. So if you want to connect with us, you can check our LinkedIn or Instagram. Again, my name is Angeline Mondonedo, and I'm with Ayana Alipio. See you again next week.
See you, everyone. Have a good day.